What's going on? Money Morning Live. Let me know in the chat right now who is going to be here at 8 o'clock for Garrett's event. I'm excited for it. I know I said it earlier, but I'm still excited now, an hour and a half later. Let me know in the chat if you're going to be there. But right now, it's time for Tom Gentile to hit the stage with Power Profit Trades. Bringing them in 5, 4, 3, 2.
Hey everybody, Tom Gentile. Welcome to Power Profit Trades, Wednesday, February 9th, 2022. In the next hour, well, it's going to be a little less than an hour, but over the next hour, we're going to be doing some more work with Brutus. And I've got more signals. I want to show you some signals. I got another trade idea for you by the end of the show. We're going to look at today's big earnings movers. And I want to do a relook at UPS. And I want to talk about why that made the watch list. And even if it's up a little bit today, why it looks really good right now as a bearish trade opportunity. Of course, I'll be taking a few of your charts right from the chat. And we're going to try to build some extra time in so that we can go through the chat and go through a little bit of Q&A with everybody here, both on the Money Morning Live stream as well as my YouTube subscribers. Glad to see you here and ready to go as well. So, got a lot to get through, Eric.
I'm ready to get into it, man. I'm ready to go. I mean, why don't we start off with your market update? No?
Let's do that. So, I am looking at my stock charts right now, and here's some things that have transpired since yesterday. So, big red arrow over on the hard right edge of the screen. As you can see here, we started out Monday as kind of an iffy day. Now, yesterday became what was called an outside bar day, okay, for SPY. I'm going to zoom in and show you what I'm talking about here. Right in the middle of the screen. So you see Monday's action, open, high, low, and close. We had a red candle because the close was below the open. Yesterday was a green candle day. We opened lower. We came down and we went just below Monday's low, but then had a big rally. And we actually went also above Monday's high. Closed up here, green candle. Big body, all right, a couple small wicks. What this means, this isn't called an outside day for those of you that don't know. All right, an outside day is where the low of the current day is outside of the previous. It's lower than the previous low, and the high is higher than the previous high. That's called an outside day. Now, look what happened today between yesterday's close and today's open. We had a rally last night that came into this morning, opened higher, and now we've got a small situation going on, but getting ever so close to breaking resistance from last week. This is very, very bullish if we do. If we break that resistance, I'm looking for us to go up here and start to make a run toward those all-time highs again. First stop, if we break last week's high, would be 470 on the S&P. It's 456 right now. Let's think about this, everyone. We are now coming into the middle of February. So if you were to look at a calendar, all right, I'm looking at mine, but if we count off the days, we had 4 days last week that the market was opened. All right, this is 5, 6, 7. So if this bullish opportunity, if this bullish move were to happen here by Friday, then you've got Friday the 11th, you've got Valentine's Day, don't forget that, on the 14th, and then you've got Tuesday the 15th. Those are 3 very significant days because that's something I call the mid-month pattern, and the mid-month pattern is shaping up to be something that I think is going to actually turn out to be a bullish opportunity. So we actually have, and this could start as early as today or tomorrow, but if we break above this high and we do it before the end of the week, I actually like the pattern going into next week using weekly options. Simple calls may work out really well. Why call options, you might ask? Well, because up here, this is the time to be doing spreads when this volatility is high. And we're talking about volatility this week, so let's mention it right here, right off the top of the hour, or the bottom of the hour, whichever way you're looking at it. So high vol was consistent with all of this move to the downside. As we started to move back up, the volatility collapsed in the index markets, and it's hitting new lows today. So we actually have lower lows in volatility than we did the day we were actually higher. Okay, this is another area, another reason why I believe that call options and some sort of bullish move in the S&P is potentially likely to happen. And we could have a very big move here. All right. We're talking about something that, we're at 456.10 as of this chart. And if we're looking for a move to 470 by next week, hey, it happened in a matter of a couple of days back here at the end of January where we made those kind of moves to the downside. We could likely make them to the upside as well. So get ready. There's a possible trigger event that's happening here in the S&P 500. Eric, I'm going to take this a little bit farther.
All right,
if you don't mind.
No, go for it.
Stock and options table, and let's just look and see what these call options might look like. All right, kind of excited about this. So with options in the SPY, we have Wednesday, Friday. We have Monday, Wednesday, Friday options. So timing is kind of critical here. What I would be looking at is either next Wednesday or next Friday's options. Notice next Wednesday's options have 171 strikes, right? 7 days to expiration, where next Friday's options have 232 strikes and 9 days. If I were just eyeballing this right now, I would say the one I'd like to go with is the Friday. The reason the Friday gives you 2 extra days, number one. And number two, it's going to be a little bit more liquid. The spreads between the two, the spreads on all of these are thin, but you may find the thinnest spreads on Wednesday, the 18th. That's also the third Friday of the month. That's where all of the volume, that's where all the liquidity, all of the trading happens. So let me update that real quick, and let's look and see what these options are looking like. The at-the-money calls, boy, there's a lot of strikes. We're talking about something that's trading just north of $5. So could this become a double by next week? I believe that it could, because in order for this 5 to become a 10, we need to be somewhere in the neighborhood of about 465, right? 465 on the chart, once again, looks like this. We'd be somewhere right about here, still below the dotted line, right? So we're talking about 10 potential quick 9 or 10 points that could happen in a matter of a few days. Again, what's this based on? A trigger event that we call the mid-month cycle. The mid-month cycle only lasts 3 days, but it's coming up on the 11th, the 14th, and the 15th. We could get in a little bit before. We still have time to get out after if the trend is our friend. And it's just a quick idea at the top of the hour that I wanted to share with everybody. Okay, so enough on the overall market trigger event. Let's continue our trek into the rest of what I look at in the 40,000 foot view. Bond market getting a little recovery. That's great for stocks. See that move down here? Not much of one, but if we could get back up to around the 140 level, I think stock traders are going to feel really good about that move. As long as it doesn't happen if we don't have just this pouring into US or into TLT, right? Need a little dribble, and I think that's great for the stock market. USO back on its trek higher. All right, get ready. I'm going to let you guys know right now. I am putting together my oil and energy report for 2022, and that is going to be ready here by next week. So, on my to-do list, Eric, number one to do, get something for Valentine's Day for the spouse. Number two to do, start buying oil and energy stocks and going out several months, because the seasonality effect is about to happen, and that's going to be happening starting next week. So, I got a busy week here at the house. I got 2 things I got to worry about: my love of my spouse and my love of oil and energy.
Don't mess up that first one, Tom. I think that's the most important, right?
Oh, yeah, it most certainly is. So here, let's take a look at gold. Something that maybe I'll get for as the first one, potentially. VLD is looking really good. We're having now. Take a look at all the candles of what's been going on here for the past week and a half. We bottomed out down here below 167. Since then, we've only had one red candle in the last 9 days. In fact, the last 6 days have all ended with green candles. We have a green candle today. We're coming up on some double resistance. See these 2 double lines here, folks? 171, which guess what? That was the high, 171.01. I need to close above 171. We get the close above 171, and then we're looking at the next area. Come on over, around 172.60, right? And then from there, we've got new highs for the year that we'll be looking out for on GLD. VIX, hey, can't say I didn't tell you so. All right, that's what this one's being offered by. We did this on Monday. Today's broadcast is being offered by I Told You So, and that's what's happening with VXX right now. We discussed that this was likely to move lower, and I discussed that we were going to be going below 18 in a rather quick time frame. Here's what's happening. That big move to the upside, drop off, a little bit of a relief rally, drop off. This is the area we're looking to go to next. This dotted line is in the high 17s. As volatility goes lower, folks, this is good for stocks, good for commodities, and good for what? Crypto, because crypto's holding up pretty well when you look at it too. We'll take a look at the crypto markets as I end this section of our hour together. We're going to I want to move a little bit further into some stocks before I do. Let's go ahead and get to crypto. Live price of cryptocurrency. You can see it right now here. So if you go back, this is February 4th, down here in this area on the left-hand side of my screen, where you see Bitcoin in the high 30s. All right. Then we had that big jump up. All right. Remember the weekend, the big jump up. And here is February 7th, Monday. We're already trading above 42. The 8th, we're already at 45. Okay, that was yesterday. Excuse me. Coming into the 8th this morning or yesterday, 45. Back down. Am I even looking at this right? I'm looking. Sorry. Yeah, guys. My apologies. Yeah, I am looking at the right thing. February 4th, February 8th, little pullback. 43,000 we've hit a couple times. We're at 44 again. We're back to 44, and 44 is down a little bit based on where we were yesterday, because the way we look at crypto is a little bit differently than you would look at the stock market. The stock market is always based on, where are we today based on yesterday's close. With crypto, it depends on what you're looking at, but I'm looking at a 24-hour chart. Where are we based on where we were 24 hours ago? We're off 0.25%. However, the fact that we see this great support now, I had support pegged at 40,000. And I said we needed to remain above 40,000 for 3 days before I like 40,000 as support. Well, you know what I like as support? 41, because all of this action over the weekend, that was 41,000. Now, the other thing I like is the fact that we have a higher high at 42.2. We have a higher high yesterday at 42.6, and we're already above all that right now, heading into the 44s. News. Well, the latest news that came out recently is that Betterment, and we'll get into the thick of things with news as we do every Monday. I'll talk about more news articles on Monday, but Betterment came out not too long ago. This is the company that is out there. They're more about long-term investing. They're more about retirement, reaching retirement, and they have now added crypto to the retirement part of the program. And so big news, and I think that's also causing a bit of a push. And the CEO of Betterment came out and said that they wanted to offer this. And when asked why, what makes you different than everybody else, and it's actually a pretty good answer, is that we're not talking about today, tomorrow, next month, next year. We're talking about years down the road. We want to add this, and we want to add the best. So when they say the best, folks, there are over 17,000. When you take a look at cryptos and NFTs, 17,000 different areas you can trade and invest in. All right. What do we look at? What do we look at with Microcurrency Trader? Really only the top 50, if best. Okay, the top 50. I'll leave the other 16,950 to anyone else that's out there. The gamblers, the folks that like low liquidity. And of course, the creatives, the artists, the ones that are buying NFTs because they like them, okay? And there's nothing wrong with that at all. I like art just as much as anybody. I own a number of different paintings, pictures, etc. I've shown it on this show, a couple of them. I showed my Rudy picture. I've got that. I've got a Leonardo DiCaprio signed Wolf of Wall Street with the dollar bill on it. I've got that on the wall. I've got a number of different things, but I got them because I like them, and I think a lot of people buy NFTs for that reason. Eric,
Yeah,
you're a big NFT guy. You
yeah.
don't buy NFTs to turn around and flip them a day or two later as a trader, do you?
I mean, I'll tell you this: if they did increase to a level that I was happy with, I would flip them right away. But I always do make sure that the artwork is something that if I am stuck with it, if it goes to zero, at least I have something that I think is cool. That's at least my goal when I get into NFTs. But Tom, I have a chart for you. This is on the MRK call option 50%. You want to take a look at this chart really quick?
Let's look at that since we're talking about volatility and we're talking about things going on. Yeah, so this was a call option that we'd put on, again, trigger event, 50% in 3 hours. We thought, you know what, good enough. And those things do happen sometimes, folks. You know, you get these trigger events. Most of the trigger events that I have typically are about a week in nature if they're a before trigger event. If they're an after trigger event, then we're looking a couple weeks out. But every once in a while, we get one of these. You know, you end up putting it on in the morning, and by the afternoon, it's up so much, you think, why not? Take the thing off of it, move that quick, that fast. So, yeah, very interesting that these things do sometimes happen. Not all the time, but sometimes they can happen.
Got to take advantage when they do.
Absolutely.
Let's move into top earnings. How about that?
Yeah, so we're talking about trigger events. Let's talk about top earnings, and I want to talk about. Let's start off first with. Let me bring it up. Chipotle. Oh, let's talk about the ones we are going to cover. Okay, so we got a lot of trigger events going on today. I got a half a dozen I want to talk to you about right now on the program. So we're going to talk about Chipotle. We're going to talk about Chicago Mercantile Exchange. We're going to talk about Peloton, TEVA, Canopy Growths, and apps. So we're going to cover each one of those. I want to show them to you on the chart. Let's start with Chipotle Mexican Grill. All right. I have to say, guys, this is one that I started adding to, I was adding to. This is more of a long-term thing. And boy, did I have to suffer on the way down. Because you can see here, I mean, we're only looking at a 40-day chart. 40-day chart that took us up above 1750, down to 1300 before getting some basing. Now we've moved up. We did have an earnings report. That earnings report beat estimates. Look at that. Look at that move, Eric. See that big move in volatility?
I like big lines like that.
This is better than any ride that I've ever taken at Disney or Universal. Maybe that, what was the Tower, the Tower of Terror or something, where you're doing a complete drop. That's what happened to anybody who was buying options, especially put options that day, thinking this was going to roll back over. They took the Tower of Terror, but is there a potential setup on this? What I do is I look at the trigger. Part of the trigger event we look at is volume. There's not a lot of volume. We had more volume the day that Chipotle did this turnaround day where it hit new lows for the year and then turn around. That's, by the way, guys, that is a 125-point turnaround day, which you might say, that's nothing. I've seen that happen in Amazon and Google all the time. And while that's true, it's definitely something when you're looking at a stock like Chipotle Mexican Grill. Today, we went from the 1450 roughly close of yesterday to now hitting 1583, another big 100-point plus move for today, but no real trigger event coming out of the post earnings for Chipotle. All right, next on the hit list is Chicago Mercantile Exchange. If I look at this move to the downside you see here, for the last literally 30 of the last 40 days, we stayed in a range of 220 to 230. And then we started breaking out of the range, right? One word that I have to describe the move that we see that took us from 220 up to really before earnings, all right? Before the earnings announcement, actually coming out today. This big move, Bitcoin, because again, CME is, they have crypto related products now. And so they are moving a lot like the cryptocurrency markets. In fact, it's one of the stocks I look at when I look at cryptocurrency stocks. So what's going on with them? We've got earnings coming out. We actually start to see the drop going on with volatility here, as you can see. Earnings came out. I think this was a before market event that you see happening with CME. So next earnings are going to be scheduled for May 10th. And what's interesting is you might say, was there a surge event here? There was not. The reason why? Look at the surge. The surge actually happened well before an event. And then as we were coming up here, surge never really took off. It got above the highs that we saw back at the end of September. Peloton. Wow, this one's been in the news a lot. I mean, you see the 45-day chart with it, or 40-day chart. 40 days ago, this thing was trading above 40. Went as low as 24, once, twice, 3 times. It hit a triple bottom. What was the news on Peloton? Well, there was a lot of news. I mean, look at it. It turned out that in the end, a lot of people decided that this was just a fancier piece of equipment to hang shirts on, right? It actually has, that the interactive screen. I have a Peloton. Got to tell you, I hadn't used it in a while. Keep saying I want to get on this thing. I actually have a rowing machine that does kind of the same thing. I like it better. I like the rowing machine better. I just think it's because it's the seat. The seat on the rowing machine feels better on my butt than the seat on the Peloton. But that's not the real reason. We had a couple of shows recently that came out where, I got stuck. All right, I'm going to say it, Eric. I got stuck watching that. I got stuck watching that pilot season of that new Sex and the City. Again, the things we do for our spouses.
That's a good one.
We do for our spouses.
You're a good husband,
Hey,
Tom.
I hope. Man, I mean, you know what? I wanted to watch the Olympics last night.
Yeah.
I know Garrett's not watching the Olympics. I keep hearing him trash the Olympics. Let me tell you, I love the Winter Olympics. Not all the sports. I like the bobsledding. I like the luge. I like ski jumping. I like sports where I'm certain to die if I was on one of those things. That's the kind of sports I like. But I substituted that for Sex and the City pilot number 1. Got to tell you, it had me there because the big guy dies. Oh, God, spoiler alert. Sorry if I told you guys any of that ahead of time.
You said that a little too late, right after.
I did. I'm so sorry, everybody. But the big guy dies in the first season. And here's the reason I'm telling you this. He dies riding a Peloton. He gets off the Peloton and has a heart attack. That wasn't good for Peloton because I heard that's not the only show where someone died on a Peloton. Not good for Peloton. Anyway, there's that. There's the cutoff they did. They cut off of supply. They literally stopped making the Peloton, and they came back and said, no, we're just shutting down production for a few weeks. Either way you slice that up, it's not good information. That was the big drop that you saw from 32 to 24, right? Then we rattled around 24. Now, you know what is driving this up? Not so much earnings, because when you see this arrow up here, Eric, and it's the E, and it's in a triangle that's pointing down, that's not good. What's good is that there are possibly some takeover candidates out there. Apple and Amazon among one or two of them, because they could utilize those millions of people that are on their email lists, millions of their subscribers in other areas. Okay, I mean, I could see a lot of cross marketing that Apple could do with Peloton. Okay, so that's a big reason why Peloton's getting a bit of a boost there. So that's Peloton, but is Peloton been a trigger event? No, it's not. And the reason why is because it's actually moved around a little too much. When you get a move that's 32 to 24, okay, when you get a stock that moves that much in a single day, anywhere near earnings events, to me, that's it made an event before it was even considered a trigger move. And Brutus said, no, we're not going there. TEVA Pharmaceuticals. So TEVA Pharmaceuticals really so far it's the least of the movement that we've seen in those earnings reports. And you can see TEVA jumped on its earnings today from the low end of where it's been in the last couple of weeks all the way up to its resistance level. This is a $9 stock, okay? I tell people that if the stock's less than $10, sometimes the best thing to do is, if you really like the stock, don't buy the options, buy the stock. It's going to end up being your better candidate in the end. Canopy Growth, not doing too much growing here, as it too is less than $10 a share. I'd seen much, much better days. We saw this drop all the way down to below $7. It did make a move up, but again, I'm not a big fan on stocks that are below $10. I just find there's not much to make on an option trade. You know, if it's a 50-cent option that becomes a 75-cent option, yes, that's a 50% move, but it was only 25 cents. What are you going to do with 25 cents? And then finally, let's take a look at Digital Turbine, or APPS, APPS. And you can see this one had its high at above 70. There was a drop off after that, starting to get a bit of a move in here. This does look like a surge event, okay? But when I come down here, I see all the volume was happening at the end of December. Big volume event that happened over here in December. So really, the best opportunity was behind us, and it was on the bearish momentum side of this big candle you see here. Over here, there was no real trigger event that we saw, because look at the volume. The volume was barely anything. So there was we didn't see any surges coming into this event. The only surge we saw was coming out, and that was a month and a half ago. So there you go. That's our six stocks that we're looking at. So Eric, I think it's straight up 12 o'clock. Let's get into our strategy session today.
Yeah, let's do that. And I want to remind everyone that after the strategy session, we get into a lot of question and answer. Tom's going to be checking out your charts. So think about what you want him to check out, and we'll grab those in about 15 minutes. So be ready for that. But yeah, let's get into the strategy session right now.
We are, and and I promise you guys, we're going to build in some time. We're not going to say, "Hey, it's time for charts at 12:26." All right, we'll do it a little earlier than that, I promise. All right, so yesterday I talked about UPS. So let's get back into UPS once again. With our trigger strategy. Oh, and let me tease everybody real quick. There's Brutus, ready to go. All right, we'll get back to Brutus in a moment. UPS. So UPS actually offered us one of two types of trigger events that we look at here at Operation Surge Strike. So one of the trigger events we do is the before earnings, and we've been talking about that a lot. But another one that happens is what tends to happen after earnings. And after earnings with certain stocks, we get just such a huge move into them. We see a lot of volume. A lot of people are stepping into the trade. And in the case of UPS, UPS was a stock that had a high in the last 40 days of about 220 and a low down here around 195. So really about a 25-point move. And then it had a big pop up to near 235. Since then, it's kind of been hanging out in the area of the candle the day it made that move. We saw a little push below that, and that gave us a bearish event. We talked about that yesterday. The stock was trading around 225. Right now, it's at 226.75. You see that candle right there, Eric? There's a push. So here's the push I'm talking about. If you look at the stock market right now, ladies and gentlemen, what you're going to see is you're going to see the Dow up about 270. You're going to see the S&P up about 50 points, and you're going to see the NASDAQ just coming off about a 200-point move to the upside. So 0.75% for the Dow, 1.1% for the S&P, and 1.4% for the NASDAQ. So where's UPS in all this? Up a tad from yesterday. Not 1%, that's for sure. But most importantly, look at this red candle. This red candle tells us this is where the market is right now. Yeah, it was up here earlier today, but it's making a comeback. It's making a run back down. What our expectations are is that we run down to a minimum of this dotted line here, and possibly could run down here by mid-March. So we were looking at a surge event using the March 18th options. All right, it was a trade idea, and I threw it out there as an idea, but you find what works for you, okay? But what I'm looking at here is, all right, how can I capitalize on a move on potentially a low risk and a higher reward move. Because my risk would be as if we get above this 232 area, then I'm wrong and we're out, okay? But if we come back down to, let's call it 218, and more importantly, if we come back down to about 208, these are the areas, the target areas that we're looking for. So how much is this going to cost me? Let's look at what it cost yesterday, because it's important to look at it yesterday because we talked about it yesterday. So let's go back to UPS. I'm going to click on UPS, and I'm going to bring up the March 18th options. Let's get rid of the options that are out there, 20%. The ones that expire. We don't want the ones that expire in 2 days. We want the ones that expire in 37 days. Now, here's what I'm going to do. I'm going to go back, and I'm going to look at the 8th. That was yesterday when we were discussing this. All right, so now I'm looking at the option prices as of yesterday. So yesterday's option price, we had 225.20 was the close. So we were looking at those 220 and 210 puts. Now, if we were to buy the 220 and sell the 210, this is what we call a bear put spread. You're buying the higher strike put and you're selling the lower strike put. And we were looking to do this for, I think we were looking to do this for around 200, and it was around $250, $260 was where this trade was. And that was yesterday afternoon, and it closed around $260. Let's take a look at it on the graph as of the close of yesterday. So I'm going to click on the risk graph, and you can see here that we have, okay, it's $270 trade. So it's $270, and then it could make possibly 270%. Now, yesterday we were looking at it was actually 260, and this was closer to a 300% reward to risk ratio, but that's fine. All right, we'll look at it as of the close of yesterday, 270. Now, what is the most that we can lose on this trade? $270. That's the most you stand to lose between now and expiration, which is when? March 18th. What's the most I can make on this trade? Over here is called max profit. Max profit tells us the most we can make on this trade, and the way you determine max profit is you're looking at 10, all right, that's the difference between strikes. You multiply that times 100, that's 1,000. So $1,000 minus 270, which is what you paid for it, means you could walk away with a max profit of $730. Okay, this is what it looks like on a risk graph. Here is the trade, here's the chart on the left, and here's my trade on the right. We need this to go down. Now, most importantly, where do we go? You know, where are we if this hits that 208 number that we're looking at? Okay, the 208 number will, and again, you can look at a couple things. 218 somewhere around here on the graph. All right, there's 216, 218 right there. So right there, it could show a profit of about $109 to $124. All right, if this happens here in the next few weeks. How about if we come down here to the 208 level? Where do we go? We come all the way out here on the graph. Looky here. By expiration, we could be at full profit. All right, so it's absolutely doable within our target range as we were looking at. So that's a bear put spread. Where's it at today? It's going to be down a little bit. Let's go ahead and click on, see, and I have the ability here to back this up, forward this. We're going to go to the latest, which is 1 day later. And you can see it's down about $47. So if you look on the graph, look what happened. This was yesterday. This is where we were yesterday. Here we are today. It's up against us a little bit, and this is where we are on the chart. Okay, so you can see how much is down. Now, that is, this is as of just recently. So we'll see where this ends up going. You can follow along with this one, but this, again, we have capped our maximum risk to what we paid for the spread. We also cap our maximum reward, but our maximum reward is nearly, it's 2.7 or 270% of risk. So that's how you create those 2-to-1s, 3-to-1s, 5-to-1 reward to risk ratio, even on a trigger event like UPS. So now that we've looked at UPS, what I want to do is I want to jump into Brutus, and I want to show you some more trigger events. I want to show you some that are coming up and what we're looking at doing that. Now, this is the same software. This Brutus software that I'm going to show you here is, we also call it optimal call put, but it's the same software that our members, our lifetime members have that are part of Operation Surge Strike. And that was what I wanted to show you as part of UPS. And I talked to you about how we could trade that setup. So let's just spend a few more minutes here discussing what else could be coming up. Now, one of the things that I noticed is, because I ran the search and I got a ton of opportunities on here, ton of opportunities. But what I want to do is I want to share one of those with you. So the one I want to share with you is John Deere. So we can look at John Deere. And what we see with John Deere is, here we go. John Deere is, and this is how I read this whole thing, all right? So obviously farm and machinery. Here's our latest close on John Deere. This is the trade idea we're looking at right now, which is the Feb 18 390 puts. They're trading at right around $8.13, all right? I have things at my disposal. Slippage, the lower that number, the better, all right? I don't like something that has a huge slippage factor, because if it does, then that means that it's going to be harder for me to get in and get out at a decent price. The options are slipping at just over about a 5% value. That's fine. We can even cut that with limit orders, okay? My days to our earnings are in 9 days. Nobody's talking about John Deere right now. You know what's going to happen, though? Next week, they're going to be talking about John Deere, and that's what we want. We want them to be talking about John Deere next week. Now, when I look at John Deere, I see a put option. Well, that must mean that Brutus is expecting John Deere to go down. Well, that's exactly what we're expecting, because the last 4 earnings cycles, it did just that. It went down into earnings. And so we can kind of drop back here a little bit, and you can see what happened with earnings. So let me just bring up a picture of John Deere. And you can see here, we're not talking about from this move to this move. This is the day of earnings. We're talking about getting out the day before. So you can see where John Deere went from the 360 range down into the 340s. That was on the earnings, the last earnings prior. Now, John Deere's kind of making a pop here. So what we'd be looking for is some sort of mean reversion. You might say, well, John Deere's making new highs, Tom. Why would I want to go against that trade? It's a good question. Here's a good answer. Because if you would have bought puts on this back during the November cycle, you would have paid $5.70 for them. You would have got out of them for $6.32, following the rules that Brutus lays out. The earnings prior to that, buying the put on 8/18 for $5.42. That sold for $11.30 on the termination point. Okay, initiation point in May, 615. Termination point in May, 685. Okay, not a big move, but still a profit. And then look at this one. Check this out, Eric. Last year, same time around the February timeframe, the Brutus signal was to buy at $5.50, and the termination point was better than a double. So 4 trades over 4 events, 4 profits. And so that's why I'm showing this to you guys right now. So put options on John Deere based on patterns. Again, let me make this perfectly clear. Brutus, like every other thing that I have, is not 100%. Nothing that I have done is 100%. The only thing that I know that's 100% is if I bury some money in my backyard. Well, that's not even 100%, because somebody finds it, it's not going to be there. Okay? Death and taxes? I think that's 100%. That's 100% opportunity. Otherwise, what I do is I look for high probability opportunities, not guarantees, but high probability opportunities out there in the marketplace. So that is what I'm looking at for John Deere. Okay. Eric, how about we get to some questions, some charts?
Good idea.
All right.
Let's. What I'm going to ask is that everyone in the chat just throw out your symbols right now that you'd like to see from Tom, and he and I are going to, or he, I should say, take a look at him.
Fonda, Lisa, and the rest of you that are out there on YouTube, you could do this too. Give me your favorite stock, and what we'll do is look at a few of them on Monday Morning Live, and we'll look at a few of them right there on the YouTube channel. So it is all yours. Let's start with you, Eric.
Yeah, we got You Don't Know Me wants to see EWZ.
All right, so what I'm going to do is I want to look at these the same way we did yesterday, EWZ. And what we're going to do is we're going to look at these for two things. Number one, I want to look at the price, and number two, I want to look at the volatility. So this is the Brazil index. Every time I say Brazil, I think of the Fast and the Furious, and I think of Dom. You know, when he gets captured by the feds, and he's right there in the middle of Brazil, and everybody turns the guns on the police, and he says, "You can't arrest me down here. This is Brazil." So this is the Brazil index. Look at the Brazil index here. Look what's going on here. We got a lot of resistance going on up here. Double line resistance. I like this. I think we're going to cut through this resistance. And the one thing that makes me believe that is this big red line that keeps getting lower and lower and lower. That's also good news for the MSCI Brazil index. Really, if you want to look at what I think the area of resistance is, you got to look at round numbers. And round numbers to me is not 33. The round number I'm looking at more is 35. 35 is the round number that I see. All right. Eric?
Yep. Let's take a look at, how about QQQ?
QQQ. Again, this might be a good one to look at, just like SPY. A couple things that were happening with the Qs. All right. The Qs had a bottoming event that happened late last month. During that time, we saw volatility go from, check this out, volatility was a 16 at the end of December. By the end of January, it was all the way up to 40. So you were paying more than double for those options, all right, at the end of January than you were at the end of December. Look what's happened since then, though, Eric. 40 has now become 23. I mean, it's almost got cut in half. So now is a cheap opportunity. You got cheap opportunity. You have a break above the resistance that's happened over the last 4 days. We got another resistance level we've got to get above, which is just, I'm going to call it 368. But then we're heading to potentially double line resistance. I like this. And I'll say this, the same thing with Qs. I'll say the same thing with Qs as I did with SPY. This is an interesting index trigger event right now where we could possibly be going in and buying call options looking out next week as a potential exit. What do I look at? I mean, I said earlier you could look for a double, but here's the thing. Indexes move a little slower than stocks. We all know that. You know why? Because with the QQQ, you've got, you got 100 stocks all kind of fighting against each other. With the S&P 500, you got 500 stocks all fighting with each other. So it's the average of those stocks, weighted or unweighted, depending on the index, it's still an average. And therefore, really what I look for in events like this is a 50% profit. So whatever I end up paying for these options, I'm looking for a 50% move. And I'm talking about using next week's options, not options that expire in 2 days. So that's what I see there for QQQ. Let me move over to the YouTube channel for a moment. And I see moving forward, asking about NVDA, NVIDIA. So NVIDIA, and we covered this one. I think we covered this one not too long ago, but it's worth mentioning again. It too has a very interesting move. It dropped down as the options went from about a 45 vol to an 80. So not quite twice as expensive, but they were getting up there, right? You got this move to the downside, but here, look what's happening lately. Lately, what we're seeing is a big move to the upside here. This has got earnings coming out in 7 days. Here's the problem I see. And you know what? Let's just do this. Let's run it through Brutus, NVDA. And let's see what Brutus has to say. Does Brutus have anything to say about NVIDIA? Well, it's still thinking. Here we go. Nope. There were no patterns found. Brutus said no to NVIDIA. Simply because we don't see something that has a high probability. We do what's called a first pass, and then we do what's called an optimal. So Brutus goes out there and says, is there anything that was 75% or better looking back on trigger events? And if so, let's run an optimal scan on that single stock. It didn't even get past the first pass. What I'm talking about here is that as we go up into earnings with NVIDIA, sometimes the stock moves up and sometimes it moves down in earnings. There's no clear pattern of what we see happening before earnings. But you know what we could do moving? We could look at this again in 7 days when the earnings announcement happens to see if there is a post-earnings event. All right. Eric, back to you.
Yeah, let's take a look at IBM.
All right. IBM. IBM came up as a stock. This came up as something on our radar not too long ago, and it was not a trigger event. What it was a money calendar event. So here's what you got going on with IBM. It's hitting resistance, close end resistance right here at 138. The fact that this red line, this volatility is going down, tells me that you take that. It's also hitting some trend. There's a trend indicator that I like on IBM, and there is a seasonal indicator I like on IBM. So I like IBM, and I believe that IBM is going to be seeing some new highs in the not too distant future. Back to YouTube and back to Fonda asking about PPD. So let's look at PPD. Oh, excuse me. I'm blind. Let's do it again. PDD. Am I blind or did I just look at that? Yeah, I looked at that wrong. PDD. Pinduoduo. And so Pinduoduo has had really kind of trading in a box down here in the low around 50, 48.50. High was 68.70. We got earnings in 35 days. So I've got no clear signals at all on Pinduoduo, but maybe we might have something as we get into the next week, or we get into 2 weeks before earnings, and maybe this one might be something we could look at again. But right now, I don't see anything that's getting me excited at all about PDD. Eric, you're next.
Yeah, why don't you take a look at Facebook for us? We got Tori Rose that wants to take a look at it.
Okay. Yeah. So if you're new to the screen, or you're new to our stream, we did this one yesterday. So, but no problem. I'm going to give you some ideas here. Okay. First, Facebook had the big drop, had huge. Take a look at the volume. This is the average volume on Facebook, 20 million shares a day. This is what's been happening. 180 million shares traded hands on that big down day when we were down 25%. Since then, we've seen a little bit south of 90, above 90, and now at 70. We're starting to see the volume come down, but I mean, nowhere near the average volume. I believe as volume comes down, that's going to be good for Facebook, because what it's telling me is that the big earthquake shock is over. And I believe people are going to be looking at this as a long-term play. This is not something that you're going to be looking at for next earnings season. You got to go out a couple of earnings. It's going to take that long to fix some of the issues at Facebook. But I mean, this company has a lot of money, folks. And when you go back, these are pre-pandemic levels. These are levels we haven't seen in quite some time. So if you're patient, this looks like a good opportunity. Right? It could come down to 200, but what we're talking about is something more longer term. I can tell you that my long-term guys, my long-term team loves Facebook, right? Loves it to the point where I guess I could come out and even say my family, if I were to have to give you full disclosure, family owns it. I want to own it. I'm probably going to be looking at some sort of alternative way of owning it, more than likely selling put options. So I just haven't pulled the trigger yet, but I'm getting very, very close to at least starting to add some of this to my long-term portfolio. All right. I got one I got to talk about here, and that is Dwack. All right. Another family-owned DWAC. This is another family-owned stock. I don't own it. Someone in my family owns it. Actually, I think a couple people in my family own it. And smart. I got to tell you this. My wife picked this stock up around the high 50s. How smart was she? Because I would have never touched this. And the reason why is because it doesn't come up on any of my systems. That's the thing. It either has to be on my systems or it has to be some long-term thing that I'm looking at. I looked at this and fundamentally it didn't make sense in my portfolio, but she said she thought it was a good play on Bitcoin, a good play on the return of Donald Trump, or at least the return of him into the world of advertising. And boy, she's looking like she kind of knows what she's doing here. But yeah, so when I look at Dwack, That's all I could say about it, other than the fact that we're coming up into an area. See this single line area? This is a very big resistance area. If we get above this 86.5 range that you're seeing here, all right, 86.5, 80, really about 87. We'll call that 87. That we close above 87, then this stock has the chance to get back to triple digit $100. All right. Eric,
Yes.
your turn.
We have Ying Ying, and Ying Ying wants to see Microsoft, please.
MSFT. I like this stock. This is a nice long-termer. However, it has pulled back, and it's interesting. It just got taken to the woodshed like everybody else from December, from the end of December and January, as 340, 345 went all the way down to near 275 before getting a bit of a rebound. Great earnings. I think these guys are in the right space. They always seem to be in the right space on the long term. Big thing that has to happen here, this double line resistance, which is around 314. We need to get back above that and close back above that. I also think that that this could happen. This close above this could happen with this trigger event that we're looking at, this index trigger event, which is likely to happen with SPY and QQQ and the stocks that surround it, which Microsoft is one. All right, let me look at Coinbase, because looks like Greg over on YouTube is asking about Coinbase. Let's take a look at it. So COIN, again, Bitcoin played to the downside as we saw Bitcoin come down into the $32,000 range, $33,000 back there at the end of January. And so Coinbase is obviously getting they're moving along up with the move in cryptocurrency. That's why you see it moving higher back up to the 210 level. Isn't it amazing that this stock was in the threes, in the high threes not too long ago, and literally got cut in half before getting a rebound? If you believe in cryptocurrency and the long-term effects of cryptocurrency, then Coinbase is a great place to be. However, keep in mind, these guys have competitors, all right? Even though I think they are the big gorilla in the world of crypto exchanges, they do have competitors. Competitors are going to take a bite out of them. But as long as they continue to pivot and move into areas like NFTs and get these things going, then I think that they stand to be a force to be reckoned with. So I do like Coinbase, and I think 238 is the next move that I expect to see in Coinbase. That's the double line that you're seeing up here. That is consistent with support back in December and resistance in January. All right. Hey, you want to continue on here?
Yeah, let's do one more, and then we want to get your pick for the day, if you have a pick for the day, and then we'll close up shop. Let's take a look at Netflix. Mikey wants to see Netflix.
All right. So Netflix, again, another part of our FAANG. We do these every single week. No trigger event at all. Big drop down. No pre-trigger event, but did we have a post? We did have a post-trigger event. Post-trigger event really happened rather quickly. It was literally a day, and then that was gone. And we actually saw that move happen. But since then, it's kind of ran into an area where we've got new support down here around the 365 area, and resistance is up here at 460, very, very wide. This is one of those wait and see times. The wait and see time tells me that we need to wait and see before we get above the resistance, or we need to wait and see if we get below support. If I were going to call this one way or another, that red line volatility, that's coming back down. We haven't seen it this low since the beginning of the year. If it continues to move lower, that's going to bode well for Netflix. Let me get one more. Andrew's asked me now. I think he's asked me at least once, if not twice, NEO. So let's put NEO up there, and I'll make that the last one of the day. There you go, Andrew. This one's for you. NEO. So we're looking at NEO. It's got earnings in 20 days. All right. I'm looking at support and resistance, which we broke through. We now have a new single line support at 21. We got resistance up here at 26. It really kind of ekes out something, whether or not Brutus has anything to say about it. Let's go over and look at Brutus one more time. And let's just punch in NIO. All right, because it might have an event, it might not have an event. It all comes down to patterns and whether Brutus is going to spot a pattern for us in NEO or whether it's not. And guess what? No patterns on NEO. That means that as we go into price in that 7 to 14 day time frame, and we're not there yet, but it's already gone out and looked, and it's basically told me there's no upward trend, there's no downward trend, there is no real trend. We can't even look at buying straddles on this one at this time. So there you go, Andrew, and that's for you. Guys, my trade idea, I mentioned a couple of them here at the beginning of the hour, and that was on looking at bullish moves in the SPY, all right, looking at bullish moves in QQQ. And those are something that have option potentials as simple as at-the-money calls. And I'm looking at the money calls that expire next week. That's what I'm looking to get in. And I'm looking for about a 50% profit on those call options. So whether it's SPY or whether it's QQQ, I kind of have a favorite. And if you were to really hit me on my favorite, I'd say my favorite is SPY. Other than that, take a look at John Deere, because John Deere, we were looking at those February 18th put options, the 395s, although that may change by the end of the day. But we're looking at puts in John Deere, and we're looking at call options on the SPY and or QQQ. All right, that's my show for today. I'll see you guys that are with us in our that are part of our paid services. Straight up 1 o'clock, we'll be getting into high probability strategies with Rocket Wealth. So I'll see you at 1 o'clock. If not, I'll see you back here again Monday morning, 11:30 a.m. Have a great rest of your day. See you guys.
Hey guys, it's Olivia Vaz. I know a lot of people in the finance space, and if I'm being honest, many of them have lost money in the markets this year. They're struggling with